Crypto stocks have been on a roller coaster, but one name stands out for both the bulls and the skeptics. Marathon Digital Holdings, ticker symbol MARA. With its deep exposure to Bitcoin mining, Marathon is one of the largest and most talked about players in North America's crypto infrastructure scene. Yet while Bitcoin has staged a major recovery, MARA's stock is still trading well below its highs. It's been volatile, choppy, and for some investors, painful. But here's what's sparking debate on Wall Street. Is this just another high-risk Bitcoin proxy, or is MARA the biggest bargain in the entire crypto market right now? With its massive hash rate, growing mining capacity, and treasury full of BTC, Marathon looks primed for a comeback, if it can execute and the market plays ball. So today, we're diving deep into the numbers, the narrative, and the risks to answer one key question. Is MARA a hidden gem waiting to explode, or a trap dressed in crypto hype? Before we dig in, subscribe to Stocks Telegraph, hit that like button, and drop a comment below. Are you buying the MARA dip or steering clear of crypto miners altogether? We want your take. Marathon Digital Holdings is a Bitcoin mining company focused on operating large-scale mining infrastructure across the U.S. Its core business is validating Bitcoin transactions through its massive fleet of mining rigs, primarily located in low-cost energy states like Texas, earning BTC rewards in return. Unlike some peers who diversify into other cryptocurrencies or blockchain applications, MARA is a pure-play Bitcoin miner. This means its fortunes are closely tied to Bitcoin's price action, offering investors direct leverage to the world's largest cryptocurrency. In addition to mining BTC, Marathon is actively expanding its hash rate and data center infrastructure, seeking to scale up its output and efficiency. With a strategic focus on renewable and cheap power sources, the company is positioning itself as a U.S. leader in the push for domestic crypto mining dominance. 2024 wasn't easy for MARA. Despite Bitcoin gaining over 120% during the year, MARA's stock dropped roughly 26%. The April Bitcoin halving cut block rewards in half, just as global mining difficulty hit record highs, squeezing margins across the sector. Marathon posted a $124.8 million net loss in the third quarter of 2024, despite a 34.5% year-over-year revenue increase. The company also battled issues tied to infrastructure buildouts and power supply contracts, which impacted efficiency and output. Even so, it ended the year holding over 44,800 BTC, worth roughly $4.2 billion at current prices, and hit a new hash rate milestone, putting it among the most powerful miners globally. Despite the rocky year, there's a case to be made that MARA is now trading at a discount. Its enterprise value per exahash is below historical norms, and its BTC reserves offer meaningful downside protection. With a current hash rate of 53.2 exahash per second and aggressive expansion plans in motion, MARA could deliver serious upside if Bitcoin prices continue to climb. If BTC hits $100,000 or more, as some analysts are forecasting, Marathon's operating leverage could turn exponential. With fixed infrastructure and high sunk costs, rising Bitcoin prices could dramatically widen profit margins. MARA's biggest rivals include Riot Platforms, CleanSpark, and Iris Energy. On profitability, Marathon led the pack in the first quarter of 2024 with $528.8 million in adjusted EBITDA margin compared to Riot's $463 million, CLS $321 million, and Iron's $54 million. MARA is also aggressively reinvesting. Its 2025 hash rate target is over 50 exahash per second, while Riot is aiming for 100 exahash per second. CleanSpark and Iris are expanding too, but at a more measured pace. Financially, MARA has $3.1 billion in assets and $474 million in liabilities, a solid balance sheet, but not without risk given its reliance on third-party hosting. In the second quarter of 2024, Marathon reported $145.1 million in revenue, but a net loss of $199.7 million, mainly from crypto accounting adjustments. Operationally, BTC production fell 30% year-over-year to 2,058 coins, while cost per coin surged to 88,287. Cash on hand dropped 59% to $408 million. Meanwhile, total debt climbed to $2.2 billion. MARA also diluted shareholders through a $2 billion ATM equity offering to raise funds and bolster BTC reserves. In short, revenues are growing, but rising costs and dilution remain headwinds. If Bitcoin enters another bull cycle, some predict $150,000 to $250,000, Mara could become a leveraged bet on crypto's comeback. It's one of the most operationally scaled miners and holds a massive BTC treasury, which amplifies earnings in rising markets. Institutional confidence in the sector is rising, and regulatory clarity in the US could provide tailwinds. As crypto ETFs gain traction, mining stocks like Mara could ride the wave as proxy plays for Bitcoin exposure. Mara's high operating leverage works both ways. If Bitcoin prices dip or remain flat, Marathon's profitability shrinks rapidly. Regulatory scrutiny, particularly around environmental impact and SEC oversight, could also limit its growth. The company's heavy dependence on third-party hosting partners creates risk. Outages or disputes could quickly disrupt operations, and persistent equity dilution has left some shareholders cautious about future raises. Technically, Mara is trading below both its 50-day and 200-day moving averages, with a neutral RSI around 49. Its MACD remains bearish, though insider buying and institutional support are notable positives. The stock trades in a rectangle formation between $10.40 and $25.95. Breaking above or below could signal the next big move. Retail chatter on Reddit and StockTwits remains active, with bulls pointing to a BTC breakout and bears citing Mara's cost structure. Insider purchases of 4.2 million shares over 6 months show internal confidence, while institutions now own nearly 45% of the float. Mara currently holds a consensus hold rating from analysts, with 5 buys and 6 holds. The average 12-month price target is $22.80, an 80% upside from current levels. Price targets range from $14 to $30. Institutional interest remains strong. Vanguard, Geode, and American Century are among the top holders. Some hedge funds have trimmed exposure, but overall sentiment from big money remains positive. Marathon Digital offers massive potential upside, but not without risk. For BTC believers, Mara provides pure-play leverage to Bitcoin's price. Its hash rate dominance, BTC reserves, and institutional backing make it a standout. But it also comes with real risks: equity dilution, regulatory headwinds, and dependence on volatile crypto markets. For high-risk, high-reward investors, Mara might be a smart bet. For more conservative portfolios, caution is warranted. Is Mara the most undervalued crypto stock out there, or is it simply a high-risk play riding Bitcoin's coattails? With BTC holding strong and institutional interest rising, Marathon Digital might offer explosive upside for the right investor, but the volatility, regulatory uncertainty, and operational risks make it far from a sure thing. Let us know your thoughts. Are you buying the dip, sitting it out, or waiting for a breakout confirmation? Drop your take in the comments. We read every single one. And if you're all about catching breakout crypto stocks before the crowd, hit that like button, subscribe to Stocks Telegraph, and ring the bell so you never miss a deep dive. Thanks for watching, and we'll catch you in the next one.